Hey guys, I recorded this week's episode earlier this week. And since that time, there's actually been a pretty big update when it comes to federal student loans. That update is that if you log on to your studentaid.gov account and go to the My Aid section, you will see a new display that has never been there before. And that display or that counter is a progress tracker for the income-driven repayment plans. There have been a lot of updates that studentaid.gov has made over the course of the past year. It actually started with them radically improving, showing you the progress that you've made, not just towards public service loan forgiveness payments, but also the process of verifying your employers. So that's something that was put in place first. Now you can, for the first time ever, see how close you actually are to having your student loans forgiven if you're on the pay-as-you-earn plan or the income-based repayment plan that requires 20 or 25 years. So this is actually a pretty big deal and will hopefully, for a lot of people out there, clear up a lot of confusion. It also is a sign that they are getting closer to, if not finished for most people, updating their payment counts towards income-driven repayment as a process of finishing up that income-driven repayment plan waiver. So from reports that they've put out, they haven't finished it for absolutely everybody, but for the majority of people out there, the tracker that you see, the count that's listed is the up-to-date count for your income-driven repayment plan. So pretty big deal. Wanted to make sure that I put this at the front of the episode because the rest of it's already been recorded. That being said, I hope you enjoy this week's episode with some other federal student loan and private student loan updates you need to know. Are your student loan payments or loan balances a major obstacle in your financial life? Then tune in and let's escape student loan debt. Hello, my name is Brenton Harrison of Escape Student Loan Debt and your host for the Escape Student Loan Debt podcast. A happy new year to you all. I know we're a couple weeks into the year, but there weren't that many updates over the Christmas season when it came to federal student loans. So that combined with the fact that in transparency, I was just a little worn out. We took a bit of a break for the holiday season, but we are back because there's information this week that's relevant to your student loans and also information that's very relevant to this podcast. So we'll start with that. We alluded to this at the end of last year, but we get, fairly consistently people reaching out to us saying, hey, love the podcast, which we're appreciative of. Can you look at my individual student loan situation or my and my spouse's federal and private student loans? Obviously, we can't meet with everybody one-on-one. We do have a financial advisory service, New Money, New Problems, that we operate as well. But we do want to start integrating that more into what we do in the year ahead. But we also recognize not everybody is willing to pay the price point that we charge when we do these types of offerings. So what we thought we were going to do in 2025 is we're going to start to have some episodes of the podcast and on our YouTube channel where we actually walk through someone's student loan situation and go step by step through the recommendations that we make. Now, if you're sitting there wondering, how are you going to do this in a way where we're not exposing people's information? We're going to set up a link. The link is escapestudentloandebt.com/review. Once again, that's escapestudentloandebt.com/review. If you're interested in having your student loans analyzed and having a meeting with me where we talk about what I think you should do at no cost, this is something that we're going to not charge for since you're going to be on the podcast. You can go to that link and sign up. The way that we're going to operate this is there's going to be several pieces of information that we require on the front end. We will record the episode offline. It won't be a live recording of the episode. And then we're going to de-identify all of your personal information, send you the recording in advance to make sure that you are okay with the level of de-identification. And in that final recording, the audio would have no mention of your name. The video would also not have your face. We will put an audiogram up unless there are any documents that we share on screen. And if we do so, they will be de-identified documents that provide just enough basic information for the viewer to see student loan balances, student loan interest rates, and the like. So if you're interested in having your student loans reviewed at no cost, then I would encourage you to go to that link, escapestudentloandebt.com/review. And as we start recording these episodes, we will sprinkle these in with our regularly scheduled programming so that you can see, hey, this person is just like me. They earn a similar amount of income. They have a similar loan balance. And here's some recommendations that Brenton thought would be helpful, and apply that to your own situation. Now let's get to the federal and private student loan updates that exist separate and apart from that podcast. It's January 2025. There's a lot of stuff going on at the same time that you need to be aware of. We're going to start with one that hopefully doesn't impact a large amount of people listening to this podcast. In an ideal world, it wouldn't impact any of you. And that is that this month is the start of the resumption of reporting when it comes to defaulted student loans. Since the pandemic, even if your loan was in default status, that status was not being reported to the major credit bureaus. And that has been the case since the pandemic. But starting in January, they are going back to the old method, which is on a monthly basis. They're going to report your federal student loan payment status for your various accounts. So if you are in default status, you have missed the Fresh Start program that was offered for people that was essentially allowing them to get their loans out of default without going through the traditional process. You still have a way to get it out of default. If it has never been in default before, the best way to do it is to go through what's called the rehabilitation process, which essentially over a 9 or 10 month period allows you to make income-driven repayment plan payments towards your debts, and it will pull your student loans out of default at the end of that process. It will allow you to reapply for other forms of various student debt. It will not take any late payments off your credit report, but it will remove that defaulted status, which is still a tremendous positive when it comes to the impact on your credit. If you have been in default before, you cannot rehabilitate your loans more than once. So you would be in a situation where you either have to pay that debt off in full, or you could consolidate your defaulted federal student loans into a new consolidation loan. It would allow you to, again, pay your loans back using the various plans. It would allow you to apply for additional federal student loan debt. However, it would not remove the defaulted status from your credit report. Next up is an update regarding income-driven repayment plan applications. If you're following along on screen, there's an article up from Forbes that says processing resumes for 3 IDR plans offering student loan forgiveness pass as a SAVE plan is stuck. Going further down the article, it says after a lengthy delay, the Education Department announced last week that application processing has officially resumed for several income-driven repayment plans, giving borrowers opportunities to pursue long-term student loan forgiveness. Processing had been paused for months due to a court order associated with a legal challenge to the SAVE plan, leaving millions of borrowers stuck. What they're referencing is, you're well aware if you listen to this podcast, the SAVE plan is tied up in the courts. That plan will likely be extinct in the coming months or sometime throughout the balance of 2025. But going further than the SAVE plan, loan servicers had stopped processing applications for income-driven repayment plans in general. And for a while, they just flat out took the applications offline, and they would allow you to do a paper application, although they wouldn't process it. Then they brought the applications back online, and you could submit the application online, but they again wouldn't process it. They are finally going back to processing applications for a select few payment plans. Obviously, the SAVE plan is not one of those plans because the SAVE plan is currently blocked by the courts. The income-based repayment plans, both old and new, are on the options of applications that will be processed because, as we've talked about, those plans were created by Congress. It's highly unlikely that they are at risk at all. But even the plans that are potentially at risk, the pay-as-you-earn plan and income contingent repayment plans, they are accepting applications for both submission and now processing of those applications as well. And while that's good news, I would temper your expectations a bit. They are processing the applications. I would imagine that they probably have, over 3 months for sure of applications that have been backed up in the system. So it could take months before they actually get to the processing of your particular application. So again, temper your expectations, but this is good news in terms of at least them getting the ball rolling. And I'm not going to spend a ton of time on this episode going back and forth over whether you should switch from SAVE to the pay plan and things of that nature. I'll put a link to the episodes where we've already discussed those different variables that you should consider. But what I would say is, if you're going to look at the possibility that they would potentially shut off the pay plan as well, I would much rather have an application in process, hoping that they grandfather in those that have already been received, as compared to just waiting and seeing what happens. So if you have decided to make the switch from SAVE to income-based repayment or pay-as-you-earn, don't know why you would switch to ICR, but on the off case that somehow made sense to you, I would still go through that process as soon as possible and get my application in the queue to make sure that I'm not left out if there are any changes that would adversely impact me. Now, after the break, we'll hop into what I think is probably the most complicated part of this episode, and those are the tax implications that you need to be considering in January based on some changes that are happening to your student loan payments.